Folks, we may just be nearing a market top if Nvidia is any sort of signal. The leader of the semiconductor manufacturers has reported their third quarter financial results, beating all analyst estimates, and yet it's red in after hours trading on Thursday following the release of the results. Is it a market top, or is it just a result of the market not liking the forward guidance? Or is it that the market is just starting to cycle investment dollars elsewhere? Let's dive in. Let's start off with the high level. Nvidia in the third quarter of 2025, yes, 2025, that's not a mistake, reported record revenue of $35.1 billion, a 94% increase on a year-over-year basis from $18.1 billion and a 17% quarter-over-quarter improvement from $30 billion. Analysts had called for revenue of $33.2 billion, which the company beat by 5.7%. Gross margins came in at 74.6% versus 74% a year ago and 75.1% last quarter. Operating expenses totaled $4.3 billion, a 9% increase on a sequential basis and a 44% jump from the year prior. Operating income, however, improved more dramatically, climbing 110% on a year-over-year basis from $10.4 billion to $21.9 billion, and jumping 17% sequentially. Net income for the third quarter totaled $19.3 billion, or 78 cents per share, versus $9.2 billion, or 37 cents per share last quarter, a 109% and a 111% improvement, respectively. Adjusted earnings per share came in at 81 cents in the third quarter versus analyst estimates of 74 cents. In terms of the balance sheet, cash equivalents, and marketable securities sat at $38.5 billion as of the end of the quarter versus $34.8 billion as of the end of the second quarter. Free cash flow, meanwhile, came in at $16.8 billion, more than double the $7 billion recorded a year ago and a substantial improvement from the $13.5 billion in the second quarter. Also, during the quarter, Nvidia spent $11 billion on share repurchases versus $3.8 billion last year, which was offset by $1.3 billion in share-based compensation. A 1 cent per share dividend is slated to be paid on December 27th. The substantial revenue boost experienced by Nvidia came from their data center segment, which reported a 112% improvement in revenue on a year-over-year basis, climbing to $30.8 billion versus estimates of $29.1 billion. The segment notably has benefited substantially from the rise in demand from AI-focused operators, with CEO Jensen Huang commenting that the age of AI is in full steam, propelling a global shift to Nvidia computing. The segment is currently marked by the Hopper platform, in advance of their next-generation Blackwell platform, which is said to now be in full production. As of the third quarter, Hopper is now powering several cloud services, including AWS and Microsoft Azure, with Google and Oracle Cloud reportedly coming soon. Blackwell, meanwhile, will be used in Japan's most powerful AI-based supercomputer under an agreement with SoftBank, and a similar arrangement has been entered into with Foxconn in Taiwan. Nvidia's second largest segment, gaming and AI PC, saw revenues improve 15% year over year to $3.3 billion, versus consensus estimates of $3 billion flat. The quarter also notably represented the 25th anniversary of the launch of the world's first GPU, which was put to market by Nvidia in 1999. The professional visualization segment, meanwhile, saw revenues climb 17% year over year to $486 million, while automotive and robotics improved 72% to $449 million. And then there's the outlook. This arguably is the reason for the after-hours decline in the stock. Nvidia is forecasting that the fourth quarter of fiscal 2025 will see revenues of $37.5 billion, plus or minus 2%. While technically beating analyst estimates, this revenue figure would represent growth of 6.8% on a sequential basis, suggesting the growth phase is nearing an end for the semiconductor manufacturer. In terms of other guidance, GAAP and non-GAAP gross margins are expected to come in at 73 and 73.5% respectively, plus or minus 50 basis points. GAAP and non-GAAP operating expenses are slated to come in at $4.8 billion and $3.4 billion, while GAAP and non-GAAP other income and expenses are expected to come in as an income of $400 million, which excludes gains and losses from non-affiliated investments in publicly held securities. Finally, tax rates are expected to be in the neighborhood of 16.5%, plus or minus 1%. So how did investors react? Well, they sold it off in after-hours trading. just by less than 2% at the time of recording, but still a sell-off despite beating estimates. In terms of the social media reaction, Barbarian Capital was focused on net income being higher than revenue in Q3 of last year, while Finance Lot was more of a bear, highlighting the slowing growth. Zwizzy says to give things 2 weeks and it'll be a winner, while Ted Zhang thinks the company is nearing the climax of growth stocks and is about to start heading down. The Kobesi letter is meanwhile expecting a bloodbath for those who bought options due to the lack of volatility that some were expecting with the results. The real winner of the cycle, however, appears to be Perplexity AI, who for the first time lets you track the earnings call live. AI wins again. Okay, so let's wrap it up. Has Nvidia reached the top? I guess that remains to be seen, and we'll have a better sense of things once their fourth quarter results are posted early next year. On the surface, growth seems to be slowing, and we all know that markets are forward-looking, so the top might be close. Or Nvidia could pull out another massive beat and the show goes on. Who knows? Personally, I'd like all those investor dollars to flow into junior mining shitcos, but that's a discussion for another day. All right, everybody, thank you for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. And guys, if you have any thoughts on Nvidia's earnings, please let us know in the comment section. You want us to keep covering this name, keep bringing Nvidia content? Well, let us know, folks. That way we're going to keep covering it. I love you all.